Good evening. I'm Epstein with your Metal Market Wrap-Up, and this wrap-up is for Tuesday, and we're at the 11th of February, 2024, getting out of 5:25 p.m. Central Time and getting ready for storms that are going to be coming through the U.S. I will be here tomorrow, but I know if you're traveling around, you got some real problems in the Midwest coming. Don't come to Chicago. They're talking 6 to 8 inches of snow still. I don't know if that'll change or not. And then another wave right behind that come Friday and Saturday. So we haven't had a lot of snow, so this is going to be interesting. What we are getting is consolidation in the gold market. Now, what the markets are going to wait on is for tomorrow's data. Let me go through that with you, and then we'll come right back to this. You're going to get the mortgage bankers' numbers, the Mortgage Bankers Association at 6. We'll find out what mortgages are doing, but they're near the 7% level. This is the big daddy. The U.S. consumer price data will come out at 7:30. Now, I think you have to look at year over year and where you're at. And you're probably sitting in the 3%, maybe, I don't want to hope not, higher than that. But I think you're stuck at inflation, and I have said that repeatedly. And I don't think the Fed stands any chance under the current economy. Something would have to change. Maybe Trump will change things and create some problem we don't see. But what I'm saying is it's a long way off to get to the Fed target of 2%, if you can even get there. But I am expecting 2.9 to 3% inflation numbers. That's what the market is going to gear on. The Fed Chair Powell will speak tomorrow between the House Financial Services. You saw how he was able to maneuver today. It'll be more of that tomorrow. He's not going to spill the beans on anything. There's not going to criticize the president. He's not going to give you idea what tariffs he doesn't even know there are coming, let alone what they are and how to deal with them. You're not going to get that. He's just going to be able to say they're data dependent, the labor market's strong, the economy's stronger than they thought, and that inflation is staying at this point embedded, locked in. We got some API numbers. You added 9 million barrels. That was much bigger than the prior week's 5 million. You took down, though, gas stocks of 2.5 million and just a slight amount down in the distillates. But the cold weather that's coming in, that'll probably support the energy market for a little bit longer. I'm also seeing today, and I write about tonight, it's in my report, the EIA report and what they think U.S. production is going to look like, what they think OPEC production is, where they think energy prices will end for the average of this year, 2025, and they are looking for about a $7, $8 break from that as we go into 2026 because they're convinced that in the latter part of the year, OPEC will start releasing more oil because they've been holding back. In any case, those numbers putting a little bit of pressure on the market right here. Bonds and notes tomorrow. What's the market going to be trading off of? Exactly the CPI number. They'll look at this real hard. Don't buy into the argument, oh, the other ones that are coming are going to change and CPI will be falling. Do you see that happening anywhere? I don't see it happening anywhere. Maybe you see something I don't, and that would be great. When I look at the metal markets, and that's what this is about, the dollar did correct tonight. Tonight, you're just about sitting fairly steady in these markets. They're not really moving one way or the other. They'll probably move a bit as the market gets ready for the CPI in the morning. As we take a look at gold, if it were to just close right here, you'd have an all-time high close of 29.14. This is a weekly chart of just closing prices. The momentum still up. The market today had a minor reversal, lost the punch that it had at the top, pulling back, but I am expecting to see buying on the pullback, maybe 2,900, that zone. I don't give you exactly what I want to do here. I do that in the morning at 6 a.m. in my morning subscriber videos, but I would expect to see professional buying on the break tomorrow off the CPI number. Do I think traders will go in front of it? Why? Why not see it? Don't get surprised. And, the reactions, if it's higher, traders go, oh, the dollar's going to get stronger, come down. Well, that's not necessarily bearish at this time for the gold. Gold is becoming a big-time storage of value. Higher lows, higher highs. You can see how the market's going. And by the way, it's been a storage of value forever, okay? People have bought gold. I've been trading gold since 1970, roughly. So, I've seen it come, go, fall in, fall out of favor, and basically it just over time seems to go higher and higher. The hard part is coming in when no one wants it. In the market, you're up to the upper Bollinger Band. That often creates a pullback, just the way you did it here, here, here. You've heard me say this over and over. I expect it, and the reason I expect it is until the red line closes under 79 and it's at 83.91, pullbacks in the market are not saying they have legs to them. They're saying that they're shallow and the market will continue. Look at here, when you had all those pullbacks, that's exactly what I teach in my enhanced Bollinger Band course. When we look at the gold-silver ratio, as long as I've got this in gold and you're over the 18-day average, it means gold is stronger than silver. And you see that here. Look, at this market has fallen back. Did we not just say yesterday, and we can go to this, here's where you were yesterday. I said if it continues down, look for the pros, and I know I said this, the tapes are there. Look for the pros to try to properly come in and support the market 31.8260 to 31.78. Today you got to 31.65 and you're at 32.32. So this is the zone where the market should find professional buying coming in and saying, okay, I want to own the market. If it gets even terrible, it might go to 31, but what's going to stop the market right here? Well, first of all, my work is not bullish. My work with the swing line down and the bias up is neutral as can be, but I understand how other chartists look at the market. In the copper, you only stay over a Bollinger Band 5% of the time. Now, we had the first reasonable correction in a long time today is the market was down 10 cents, and that's from being up there. But this market is not acting bearish. You're getting another bullish crossover where the 18-day average just crossed the 200-day. So you've got a lot of support coming in from 438 down to 432 in the market. What we don't know and what could be the jolt to the market, positive or negative, is Trump going to put tariffs on copper? We don't know. We know the tariffs that he's put on aluminum and steel, and what the market looked at is the date that those go on. And because it's March 12th, what happens is, you just go to your head like this. You go, that gives an awful lot of time for everybody to talk to the United States and work out deals to either not get 25% tariffs, a smaller number, maybe remove them altogether. What can they do to negotiate to stop it? That is the idea of, instead of saying, I'm putting the tariffs on, they're effective tonight. Negotiation. You don't want to put the tariff on. You'd like to have the threat of it, and via the threat of it, you don't have to put it on. Accomplish the same thing without doing that. So the market's looking at all this, and it's got to play that out. The market realizes what's going on. You already saw, as an example, the Palestinian Authority today has said they're not going to pay stipends to soldiers that get into prison, caught, whatever it might be. And that was, if you will, a give to President Trump, because in the past they have paid money. Where are they getting that money from? That's the first thing. And we're cutting off aid, and they're not going to pay them, they say. Do you believe them? Not in your wildest dream. They won't pay them the way that they were, but a lot of us just don't believe that that is in fact the case. And I love today because you had, and this does deal with metals, you had Jordan's president meeting with the president today, and everything I'm reading says the president told him, we want you to take in more Palestinians. Now remember, Jordan, out of a population of about 11 million, has 2 million already. They don't want to be overwhelmed with it. Egypt doesn't, but the U.S. gives how many billions in the region to those countries? I'm not talking Gaza. They give money to Jordan, I think $1.3 billion. Give a lot of money to Egypt. Trump is playing the cards. That's what he's playing. I don't know how that'll end up, nor do you, believe me. But you can see how the market's holding. Pullbacks still, I think, get bought. The market is trying to embed. It's at the first stage, so it's just in the overbought area. And in the dollar, you're fighting at the 18-day average. You're now churning sideways, non-directional. I want to be very clear there. Momentum has gone flat and just sort of wavering right now. And you're liable to get a lot more of that in the coming days as markets try to figure out, what do all these negotiations mean? What do all these tariffs mean? Are they real? Aren't they real? And what do the economic reports look like? We've already seen strong labor. Now we're seeing this. I hope you saw today Chair Powell in front of the Senate Banking Committee. Tomorrow he's before the House of Representatives, their financial committee. So you get a lot going on over the next 24 hours. Now, a lot of you like what we do here, and you might be saying to yourself, well, how can I use it? I know a number of you do use what we call TradingView. It's a neat charting service. Some of you use that for your stock and your other trading. You can do that with. We make a suite of all these indicators put together for you. You don't go to TradingView. You go to our website under Client Resources on the top right. You go in there, you sign up, and that's where we turn it on. So from the time you sign it on, the next business day, we'll turn it on for you. We'll send you an email. You just log out, back in, and you've got everything you need. And all of these are editable that you've got through there, so you can get my exact way of stochastics, everything it works with. This works with my courses. It doesn't take up much space for you. It's only 2 pairs that it uses. If you're using TradingView, you understand what that means. 2 slots is the right word. So how do you get this? Again, just go to iraepstein.com, iraepstein.com, and just simply go to the top right, Client Resources, sign up for it in there. I'm Ira. You have yourself a great evening. I'll catch up with you all first thing in the morning in our other videos tonight. Take care.